Hi everyone, I'm Ken from Crypto Trading KS and the CTKS method. If you're new, a very warm welcome, and welcome back CTKS family. Here we're going to look through the latest news, charts and structural levels to get a pulse on where the market is going. Let's run the numbers. My goal is to give you an institutional view on the markets. First of all, we're going to go through global news so we can assess what's happened in the past 24 hours, which is actually a retail pulse. Then we'll look at the market impacts to see how the markets actually reacted. Then we're going to look at the institutional pulse, which will literally give you X-ray vision into financial markets. Inside the masterclass, I talk about a lot of rules. Rule 101 is really important. Current news reflects current sentiment. Surprise, surprise. Let's have a look at what happened inside the stock market today. The Dow, the S&P 500 jumped after strong retail data sales. And you can see all the indices were up, and they were up quite well. And why was that? Because the higher than expected retail sales just reflected the strength of the consumer. Consumption is a major part of GDP, and GDP is the thing that measures recessions. Consumption expenditure is a very big component of GDP, and month over month changes in retail sales over last year, we saw a pretty big improvement. Tracking the subcomponents of major indices is really important, and for example, Walmart is a pretty important thing to track because it measures the health of the consumer. And what did the CFO have to say from Walmart? We have not seen any incremental decreases of consumer health or fraying. Another good one to look at is Costco. And Costco and Walmart, you can see they're doing quite well, and they're like good friends hanging out together. And when we look at Walmart's year-over-year change in revenue and operating income, its change in operating income is quite good. Also, Walmart is raising its outlook. That means stronger growth ahead. And when looking at Walmart's comparable store sales change from a year earlier, we can see consumer expenditure and interest in Walmart is increasing. No matter where you look inside the financial press, you're going to get good news and you're going to get bad news. Summer market shock not quite over as investors brace for more turmoil. And this is of course from London, and London there's a lot of turmoil going on. Hopping across to China, China Central Bank sees more growth steps but nothing too drastic. The latest data shows the country's economy is failing to gain momentum. Alibaba's marquee business shrinks amid consumer malaise. The consumers, they're a bit ambivalent. I don't know if that helped. Malaise just basically means not interested. And Alibaba's net income dived 27% as spending on promotions ballooned. In yesterday's video, we were talking about Michael Burry getting into Alibaba, so pretty interesting. Please let me know in the comments, do you tend to buy when the market news is positive? Just when we thought it was safe to go outside and hang around with other people, monkeypox is just spreading globally. And the World Health Organization has declared the outbreak a global public health emergency. In other news, the Fed Chair, Jerome Powell, to give economic outlook on August the 23rd at Jackson Hole. The US dollar holds gains on reassuring data and the euro slipped. This is on the back of US retail sales rising more than anticipated. We have just gone through the major global news stories from the Wall Street Journal, Bloomberg, and Reuters. Now we need to look at the actual impact, what actually happened inside markets. And Art, thank you very much for your very kind comment. Looking globally, we can see right across the world, as far as Canada, Europe, and the US, and also Russia, those markets did quite well. China, not so well, and Australia leading the back of the pack. But when it comes to the greatest gainers in terms of stock market, we can see that the Russell 2000, the Nasdaq, and the Nasdaq Composite Index did quite well. In the past trading session, inside the stock market, all sectors were up 1.61%, with consumer discretionary, surprise, surprise, up the most, and real estate down the most. But negative 0.34% is not that bad. Nvidia, Tesla did quite well, and we can see just a blanket of green right across the board. And it's also not surprising that Walmart did quite well, up 6.58%. We'll look shortly into what's happening with the crypto market, but Bitcoin, the leader, was down 3.82% and Ethereum down 4.83% in the past 24 hours. Looking through the top cryptos in the past 24 hours, we can see Bitcoin 3.81% down, Ethereum down a little bit more. Binance Coin did quite well, as did Solana. XRP also did quite well. TON, not so well at all. There exists a gearing ratio between Bitcoin and the alts. That's something that you want to keep your eye on. At the time of this video's recording, 24-hour percent gainers, they weren't much, and stable coins were in the list of the greatest gainers. This typically means the market is way oversold. The greatest losers in the past 24 hours were Starknet, Brett, 1000 Sats, Dogwhif Hat, Helium, Peppy, Not, Akash Networks, and Optimism. Let's have a look at some crypto news. Bitcoin sell pressure may break $56,000 support as options expiry looms. In other news, the US government's Bitcoin sale does not affect anything as analyst blames the bears. Those pesky bears. Well, those bears certainly are not stopping Marathon Digital as it buys $249 million worth of Bitcoin to reach $25,000 or 25,000 Bitcoin in reserves. And it's happened. BlackRock overtakes Grayscale as the largest crypto fund manager. And BlackRock's IBIT ETF has grown to $21 billion of assets under management since the January launch. That's not too long ago. In other news, a leveraged MicroStrategy ETF debuts in the US. Defiance has launched MSTX, a MicroStrategy 1.75 times ETF, as the most volatile ETF in the stock market. It was literally just a day ago when Bitcoin targets of $100,000 were being offered, up as where Bitcoin was likely to go next. Now we're talking about $30,000. If you're trading based on the news, you're going to drive yourself insane. It's helpful to always remember that news is just daily market sentiment. And what's happened here? Analyst says Bitcoin is primed to crash below 50,000 if major level holds. What you need is skill and not news headlines, but I'm covering them off just to show you how crazy things are. The IMF is at it again as Bitcoin advocates rebut the IMF report on crypto carbon emissions. Remember that chart I showed you in yesterday's video? That particular chart was the annual CO2 or carbon emissions. Well, what are we seeing here? The US is reducing its carbon emissions, as is the EU, but India is increasing. Well, it's just had a little bit of a kickback. But where is the majority of carbon emissions coming from? Is it coming from the US and is coming from Europe? No, it's coming from China. And China doesn't even mine Bitcoin. I think the IMF needs to check its data. We've had a look at the retail pulse and had a look at the actual impact. Now we need to know what the heck is going on, and that's what CTKS structure is all about. But CTKS is a methodology, and I'll go through it. Many thanks to Built to Spill. Number 3 puts me in the top 5%. And well done to everybody who commented on yesterday's video or who watched it. Fantastic to have you here. There were a lot of economic data releases, but core retail sales, and unemployment claims were really quite important. We saw that retail sales as a method of understanding the strength of the consumer and therefore GDP. They increased substantially. That's looking pretty good. And unemployment claims were lower than anticipated. That meant that less people were going on benefits. In about 33 days, the next FOMC meeting will occur, and we saw a couple of days ago that the probability of a 50 basis point decrease in the federal funds rate was really quite high, and that meant that the economy would be broken. The stock market is basically happy with a 25 basis point decrease in the federal funds rate because that shows the economy is not as sick as many people had been led to believe, of course, by the news. Gaining a risk-on and risk-off sentiment inside the crypto market is really important. Crypto trades 24 hours a day, 7 days a week. It's a really volatile thing. And when there is fear inside the crypto market, that generally means that there's some really good bargains around. And looking at the stock market, we can see the Fear and Greed Index is 33. The previous was 26, so that we can see less and less fear is being exhibited inside the stock market. So we're going to see some pretty rosy headlines popping out very soon. But we can also see, literally since the start of the year, fear has been creeping into the markets, and this has forced many people out of the markets. But not us. We don't look at news headlines without looking at the signal and separating signal from noise. As far as stock market sentiment, last week it was pretty dire. 37.5% had a bearish outlook, but that's decreased substantially to 28.9%, which is actually below the historical average of 31%. So people are starting to get, well, positive on the stock market. The VIX is the fear gauge of the main markets, and when the VIX shoots up, the inverse VIX shoots down. And you can see many times the inverse VIX shooting down like this drags crypto and the stock market down with it. So it's very important to keep your eye on the inverted VIX, and it's been recovering. But why the discrepancy? Why is there the difference? Bitcoin is coming down and the S&P 500 is coming up. Mt. Gox and the US government moving funds around has spooked a lot of people. And over the past 24 hours, there's been $216.33 million in total liquidations. And you can see the vast majority have been long liquidations, just down there. In terms of the percentage movements of shorts to longs, the longs getting liquidated en masse like this just freaks people out. And we can see in the past 24 hours, there's been 57,950 leverage positions liquidated. Unfortunately, many people try to get rich in markets without having the knowledge, and that's a great way to blow your accounts up. In other words, to lose everything. So unless you're an expert in spot, please don't use leverage. You need to know what you're doing. And when we look at the Bitcoin ETF funds, we had a negative outflow. Now, outflows cause a loss of interest inside the market by institutional players. But always, things do tend to recover. The crypto market in the long term is an incredible market. It's just having more and more adoption. You need to get used to the ups and downs. From the masterclass, Rule 225 is incredibly important. Bitcoin, and therefore crypto, cannot escape the stock market's gravity. And what is the trajectory of the stock market at the moment? It's positive. Fear is decreasing. The next chart I'm going to show you comes from TM6. Directional correlation is a very important thing to keep your eye on. That's just how different charts associate over time. A lot of people, when they're fresh into the market, they want to see 100% overlay. For example, that blue line is Bitcoin. If Bitcoin is associated with oil, for example, you would want to see 100% consistency. This never ever happens, so please be aware of that. Sometimes we have lags inside association and correlation, but directional correlations are very powerful, and you need to know about them. For example, when it comes to gold, there is a very strong directional correlation between yields and also the DXY. If the DXY is spiking up and yields are spiking up as well, we would expect gold to be coming down. There tends to be a bit of a lag effect between gold and Bitcoin. Either gold is leading or Bitcoin is leading. Therefore, seeking 100% overlay is just a fantasy, and you have to live with the uncertainty that exists inside financial markets. They're incredibly complex. That's why we have the Tier 1 charts. The Tier 1 charts give us the engine of financial markets globally, especially when you look at the CTKS structure. You'll see where the ceilings exist and the floors exist inside price action. And of course, like we looked at the stock market components, just mirroring back to what happened in the major indices, it's very important to look at the Tier 2 and Tier 3 charts, especially from a structural basis. If you're trading outside the US, Rule 217 from the Masterclass is a really good one for you. No stock market can escape the US's gravity. The US stock market is huge. It literally dwarfs all other stock markets around the world. If the US markets are coming up, there's a greater probability of your local stock markets coming up as well. That's why you'll find the financial press and media always talking about the futures inside the S&P 500, inside the NASDAQ, inside the Dow, and inside the Russell as well. We can see that blue line, which is Bitcoin, is a lot weaker than the stock market. There is some divergence at the moment, and when things diverge, you need to pay attention as well. We're going to look at something pretty cool. We're going to look at some fractal analysis, and from the Masterclass students, please refer back to TG35. Always do your own fractals. Inside Twitter and X and any social media site, people stretch their fractals all over the place. Unfortunately, many influencers do not have a financial background or a mathematical background. And even if they do, sometimes they can get engaged in a lot of self-fulfilling prophecies or stories. They can just tout something so much that they have to believe it. When we look at the VIX, the fear gauge of the main markets, this particular fractal was the COVID sell-off. We can see we're collapsing below that, which is fantastic. That's absolutely what we want. But also notice this downplay cannot go on forever. It's possible that Bitcoin is feeling the reflection of the VIX. And when we look at the structural levels on junk bonds, we saw that there was a major rally inside the stock market, but we've literally come up to the 95.90 level of structural overhead resistance. There was reasonably light structure inside the market up to 95.90. That's exactly why the major indices just went on a rampage. But don't forget, this overhead structural resistance is exactly that. The sellers will now start to come in. One really interesting thing, I did the fractal for the COVID sell-off right back here quite some time ago. But what we've seen is a reversion to that particular fractal. Does it mean we're in for a collapse? Just literally down to 26,000. Of course not. It doesn't mean that at all. There are so many factors that play into financial markets. Just because price goes red, don't anticipate that it's going to go red forever. It might retrace on you, and this catches a lot of people off guard. Just trade the structural levels. That's all you need to do. But if you could get Bitcoin and crypto for way cheaper, would you want to, or would you run? For example, most people run when it gets really red, and there's good reason to do so. You must manage your risk. But if you had the opportunity to buy Bitcoin at $26,000 or $16,000, as we saw quite some time ago, would you be in it, or would you just flee the market? only to come back in when things went green for a certain time and then just naturally retraced. In order to not get cut to death financially, you must be just okay with the red action. You must be able to BORSOG. And if you've got up to this stage, please pop BORSOG in the comments. What is BORSOG? If you're new, a very warm welcome. BORSOG means buy on red, sell on green. It's a very profitable trading strategy. It's not DCA. DCA is dollar cost average. DCA, you tend to hold it no matter what price does next. In BORSOG, you tend to get rid of it. It's a trading thing, not an investment thing. It's very powerful. Today, I want to take you a little bit through the CTKS risk management as well as the paths. I think this will really help you out. It's vitally important that you think in terms of three dimensions: an up case, a neutral case, and a down case. All of these particular structural levels, and they're called CTKS method paths. These paths are drawn with a knowledge of structure, the CTKS structure, and that structure will change month on month. You see here that last month, the anticipation for dollar yen was nowhere near where it went down to. Why was that? And why is it important for you to pay attention when something breaks normalized price paths? These are normalized price paths. They're meant to capture about 85 to 90% of normal price action and try to predict the end of month price under a positive, a neutral, and a negative price. Here we had the Bank of Japan, which caused the yen carry trade to unwind. We started to see a big diversion. When you get big diversions from normalized price paths, please pay attention. Are we seeing a continuation of the Japanese carry trade? No, we're not. Wow, that one's going to go down in history. That's a ripper. No, we're not. We're seeing things start to normalize. The DXY strength is taking this Japanese carry trade off the menu at the current time. Knowing where price can go in a particular month under normalized price conditions is a very powerful thing to do. We're looking at US oil, and this is dating back many, many months. These paths are drawn inside the service. They're very valuable. A lot of times we see closeouts on or near these potential price paths. It's designed to make you think in one of three directions: positive, neutral, or negative. And all three at the same time as well. It's a very important thing to master. Unfortunately, most people, when they're buying long at spot, they don't take into consideration that they may not have bought the bottom, or things could consolidate. They only assume everything can go up, and when it goes down, they freak out. That's why those paths are so important to understand and to draw yourself. You can draw those paths out on any particular chart that you're interested in. When you draw out paths, you're absolutely setting yourself up for success because you know the price can go negative and it can reverse and go positive. And when it goes positive, it can reverse and go negative. This kind of analysis is very powerful because the mainstream media press only says, it can go up or it can go down, which is absolute rubbish. Price is always moving in a wave, but these price paths are structurally bound and seek to capture around 90% of price movement under normalized price conditions, and we can see the euro is currently following the positive price path. We would expect some reflection back because the DXY is gaining a degree of strength, and that we saw in the news, but we're already ahead of the mainstream news. We've already projected at the start of the month where these paths could end up. And inside the service, you can see past videos of these paths being drawn and also how to interpret CTKS structure. When we understand the CTKS structure determines the price waves, and you have your three-dimensional thinking across all the Tier 1, Tier 2, and Tier 3 charts, you're literally in the top 5%. And every month, the hard work of marking up the charts and including those price paths is included inside the service. It will save you so much time. Rule 45, no alt can escape Bitcoin's gravity. This is potentially one of the most important crypto rules you can ever learn. As always, the blue line behind any chart is Bitcoin. And what do we see here? As Bitcoin came down, what happened to Ethereum? Did it go up? Did it just say, I don't care, Bitcoin, I'm going to go my own way? No, it didn't. It came down. What about Solana? Did it come down? Yes, sirree, it came down. Binance Coin, did it come down? Yes, it did. What about XRP? Yes, sirree. What about Doge? What about crypto total market cap? And what about ADA? Yes, they all came down. And when Bitcoin started to bounce from there, what happened in all of the alts? They bounced as well. This is a fantastic thing to keep in mind. Some bounce more than others, and ADA unfortunately has been weak for some time. But just bear in mind, the weak do become strong, but they can take their time about it. The real question is, where are the safety nets and where are the ceilings inside price action? For the vast majority of people, they say, there's a resistance level right there and there's a support level there. Why? Because it bounced down there and it bounced up there. And there must be a support level there as well, and there as well, and that is resistance, and that is resistance. Okay, fantastic. But where's the next resistance and where's the next support? They'll say, I don't know. I have to wait for price to form. This is a really bad way of investing and trading. You need pre-formed levels. And I'm going to show you how you can do that. But first of all, let's look back on the past 24 hours of Bitcoin's movement. Underneath here is a candlestick chart. Believe it or not, it's hard to see because we literally have 100 top cryptos in this list. But what do we see? When Bitcoin comes down, guess what? It all comes down. And when Bitcoin bounces, it all bounces as well. Keeping an eye on the greatest or the lower bank and the upper bank is not a bad idea. It can help you to either add to strength or add to weakness. And crypto is very, very forgiving. Your ability to find the market's focus is really quite important, and masterclass students, you might like to refer back to TM21, Finding the Market's Focus. You can look at specific groups such as the ETH ecosystem, and we can see Starknet has gone stark raving mad. It's really been whacked to the lower bank. What about gaming? Mana's not doing too badly, but it's negative at the time of this recording. Inside the CTKSMethod service, Litecoin is doing the best, followed by Binance Coin. ETH and ADA have been hit hard. And when we look at the memes cannot escape Bitcoin's gravity. They've been coming down. Also, distributed computing and file storage, they're coming down, but storage is the best performer out of a bad bunch, so to speak. AI and big data, Theta, the best performer. Solana ecosystem, Arweave, the best performer, and WIF, not doing too well at the current time. Reserve rights, RSR, under real-world assets, just leading up the top of a negative pack. But always remember, when Bitcoin starts to flip up, that's when you want to pay a lot of attention. Wallets have been decreasing, as has DeFi, Binance Labs, DePIN, the centralized exchanges. DEXs have been coming down, Layer 2 and the Bitcoin ecosystem as well. I'd like to do a bit of application of TM22 from the masterclasses in terms of directional correlation. Yesterday, when we look at the US 2-year yield, we were just down there, and today we're all the way up here in terms of where the US 2-year yield went. And we saw a lot of strengthening in the DXY as well as the yields. Now, why was that? Because the probability of a broken economy actually failed. That 50 basis point increase that we saw previously was coming down, and the 25 basis point increase started low and kept on going higher. 25 basis points, A-OK, an economy chugging along. 50 basis point increase, economy is broken. Retail sales tend to drive consumer sentiment, so that's why the S&P 500 and the major indices started to come up. Bitcoin has its own internal issues. The Mt. Gox distributions and the US government moving Bitcoin is not a good sign. Typically, when we get big surges inside the market on the US2 or the US10 or the DXY, they tend to invert price behavior inside Bitcoin, inside the major indices as well. But we've seen something else because the underpinning economic health of the system is actually improving. This is what you have to be aware of when it comes to directional correlation. Don't treat the rules as a straitjacket, more just a guide. There's also a big difference between the US2 and the US 10-year yield. The US 2-year yield is basically your savings deposit interest rate. The US 10-year yield is your mortgage rate. Yesterday we were down here, today we're up there. The US 10-year is more associated and correlated in with Bitcoin, which is always the blue line. Major indices are the white lines. You can see as the US 10-year yield was gathering strength, this upward momentum was starting to weaken Bitcoin. This association is still holding because this is a longer term basis. And as the US 10-year yield came down, that put positive price momentum into crypto, especially Bitcoin, which is highly risk sensitive and highly yield sensitive as well, just like gold. Therefore, when you're looking at cross correlations and interconnections between charts, please bear in mind it's not just the chart, it's what's happening with the economic data inside the markets as well. This is stronger consumer sentiment, and consumption expenditure is a major component of GDP. If GDP is going up, hey, guess what? No soft landing, no recession. It's important. And you can have multiple factors impacting markets, such as sell downs by the US government and redistribution by Mt. Gox and other things. But no matter what the markets are doing, in an uptrend, you can BORSOG, which is buy on red, sell on green. And it's a very powerful way to maximize your profitability. If the markets just flatten out, trend trading will die. It's just flat markets. People can't trade in them, but we can because we BORSOG. We buy on red and sell on green. Good old BORSOG. It's a fantastic thing. And in a negative market momentum, we can BORSOG as well. We just buy on red and sell on green. Buy on red and sell on green. And this is going long at spot. If you're using derivatives, make sure that you're an expert at spot first, or you probably will blow your account up. Therefore, investing versus trading is not the question. It's investing and trading. You have not been taught by the system to trade. In fact, the institutions don't want you to do that, and nor do the companies that you put money into. They want you to just give it to them and just sit on your hands for years and years and years and years. Don't worry about it. They'll look after you. But what if they don't look after you? What about if the markets get really volatile and start doing this? Can you take advantage of it? Investors, it's very difficult to do so. Traders, absolutely, you can do so. And you can do so with lower risk strategies like going long at spot. In yesterday's video, we were talking about, is Bitcoin going to A, B, C, or D? We can see that it actually undershot D. And if you had the structural levels, you'll understand why. But what we're looking at today is A, B, C, or D. And it may go below D or it may go above A. But this just is trying to get you into the concept of thinking in terms of wave-like structure. We can see that from that particular point, it went down to D. It nearly came back to B, and then it went below D. And then it's, at this stage, it's actually above D. This is a fantastic exercise to get you just skilled up in reading wave-based momentum. You can profit by any of this. If you're buying on the red and selling on the green, you're doing really well. But the key, as always, is structure. So let's have a look. Yesterday, we saw structure playing out just below C. C was trying to exert itself, but that failure meant that we were coming down to D. And when we grinded up throughout all of this pass back, basically getting back and retesting, put us into line with this 59,700 mark. But we failed here. When we came down to all this support, we failed there as well. We held this particular level just above 57,800 until we fell through multiple safety nets, and just around the 56,000 is a ton of structural support. That's why we got this rejection back up, trying to head towards the past D, which is now C. Just trying to build that three-dimensional risk management for you. What do you think Bitcoin will do over the next 24 hours? Do you think it will come down to D or below? You think it will just consolidate around C, maybe make a marginal positive impact around B, or just go for it and come up to A? This just short circuits a lot of people just thinking about, oh, the news is negative, therefore everything is coming down, therefore the world is over. Because things can reverse, but the only reversion is going to happen level by level by level. So if you know the structure, you can just chill because you can see what is actually happening. And remember, just like what happened yesterday, if it's pushing through structural support levels, that means it's coming down to a stronger structural support level below. And if it's starting to do cutovers, we would anticipate it challenging structural resistance. Cutovers and cut unders are all part and parcel of level 1 standard certification. It's also kind of interesting that we had a big spike in US liquidity that was quickly faded, but it may have been enough to revert things just momentarily, and you can grab this indicator from inside the service. When we looked at total crypto market cap yesterday, we were here. Now we are here. What is the structure telling us? Could we have anticipated, for example, this specific bounce? And did we know what was happening up here by looking to the right from yesterday's structural levels? And what can we do looking to the right on today's structural levels as well? Let's check them out. Remember to read total crypto market cap and Bitcoin together. It's very important. What we saw here was that the entire crypto market was losing structural support at 2.042 trillion. If it was losing that, it had a negative fresh air gap down to a little over 2.01 trillion. We would expect a bounce, and we got a cut over here and positive momentum up back to that lower support level that we breached previously. And then when we went above a structural once resistance level, we saw positive momentum, but it started to fade. And you could see there was a cut under just about here, which said that we were coming back to test that structural level that we knew about yesterday. And as we sliced through this lower structural level that did hold but then was faded, we needed many more structural support levels to hold price. And down around this 1.959 trillion, there were a lot of structural support levels. We came down, tapped it, and reflected. You must know where your structural levels are, especially how strong they are and how clustered they are as well. The CTKS method was developed to take you from fear into confidence and to profit in any market condition. The before is here. The news is before. You can see it just reflects current sentiment. People put out story-based analysis, but there is, amongst all that news, a lot of noise, but particularly there is signal, but you need to know how to read it. You need to understand chart intercorrelation and chart interdependence from a structural perspective. Always have your CTKS paths drawn out, and you can make a lot of money from buying on red and selling on green, the BORSOG way. You don't need to get freaked out when the markets come down. Just get prepared and understand where the structure is and then take advantage of it. I would strongly urge you to make sure that you draw up your structure across the Tier 1, Tier 2 and Tier 3 charts. It's an absolute game changer. And you know the price waves are just reflecting off CTKS structure. We prove it each and every day. If you would like to learn the skills to do it yourself, learn once and apply for a lifetime, there are 2 levels of standard certification. And if you would like to have us do it for you, there's the service. And from CTKSMethod.org, please subscribe to our newsletter. It's coming soon. Don't miss out. It's free. I'd like to give you a bit more of an insight into the crypto market and what happened. Basically, as you've stayed to the end, you really deserve to be looked after. You are awesome. This is on the 12-hour liquidation from CoinGlass. What you can see is that all of these longs got taken out of the market. What they're trying to do inside crypto, as the fear has gone up and up and up inside the stock market, and the fear and greed index has come down and down and down since the start of the year, it's starting to retrace. So what do the institutions need to do? They need to draw more and more shorts into the market to populate these higher levels. Now, this is on the 12-hour. Let's go to the 24-hour. We're seeing a very similar thing. All the buy the dippers have been pretty much whacked, and the sellers, well, the people who are wanting to short the market are coming in. The institutions need far more upward liquidity here in order to drive the price up. So please keep this in mind. It's really important. On the 3-day basis, we can see all these buying of the dip, they've nearly exhausted themselves, and the shorts are coming into the market. So you can think below the actual current price, when the current price was just there, these are all longs, and above, they're all shorts. You can see there's not many there. You need higher visibility areas to show more liquidity. The major institutions are always looking for liquidity because they have a lot of money. They need to chase it, and chasing liquidity is what they do. This is actually showing us upside bias in terms of market price potential. We could come down a little bit more, but the idea is that when the shorts just start to get so confident that it's all going to hell, that's when they'll get liquidated. That's why you need to be really careful about derivatives trading. The institutions, now looking at the 1 week, we can see most of that liquidity has been absorbed, and we're starting to get these deep yellow areas, which means a ton of liquidation value up above. That's 63,000. So please keep this in mind. Even though the news is terribly negative, the news just reflects the current market sentiment. And remember, they were talking about options expiration. That's also not quite right. At the end of this month and the end of next month, we have much higher options expiration volumes. For example, at the end of next month, we're looking nearly at $4 billion and a max pain of 57,000. So please be very aware that what you see reported in the media may not be correct, but it is definitely sensationalistic. Have a great day or night ahead, my friends, and if you've liked this video, please smash that like button. And if you're new and you've made it all the way to here, you're absolutely awesome. You're seeing things that are talked about on this channel that are not spoken about anywhere else on any other YouTube station or anywhere. This is very powerful proprietary information. Okay, so if you're new, please pop down "I'm new" in the comments and just say hi. You'll find we have one of the best communities on YouTube. What does this actually mean, junk bonds? We saw a big rallying inside the stock market. Retail will say it will continue. We know structure, it won't continue. It will likely get stopped by all of this structure, and that will perplex people. The institutions, they understand structure and they'll be selling in, as new people are just expecting upward and upward price momentum. How do you know if price will get above this structure or will not? And why is it important to look at junk bonds? This is one of the indicators that we use to understand. It's a tier 1 chart. Junk bonds gives us a risk off or risk on signal. This is risk on. And when you get up to consolidation levels, you can see this positive fresh air gap was filled. And when you get positive fresh air gaps, things can move really, really quickly. But where do they move to? Structure. If you know the structure, you can't be caught off guard, and that's the key. And when you look at this, you could overlay the S&P 500 and the major market indices, and they would all follow because junk bonds is the determining factor. That's why I've saved this one for last. If you've got to this level, you are incredible. Maybe just pop in the comments so I know who you are. Something about James Bond. James Bond. Pretend I did a Sean Connery impersonation of James Bond. Maybe something like that. Okay, so what does it mean for the stock market? We're likely to consolidate unless we get above 96, retest and go forward. Just keep your eyes on structure. That's the only certainty you need. If that's in effect, and we're seeing a big ramp up in this price, the stock market indices will follow. But if we see an underside rejection and we know that the VIX is starting to bottom out, this entire rally could be faded, and we may have a juxtaposition between crypto and the stock market. In other words, all the selling pressure from the US government and Mt. Gox distribution, which has pushed crypto down, may then be refaded as well. This is an institutional game and something that you need to be aware of. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.